Good morning and welcome back to Almus Market Mornings. It's not the courtroom drama, but the world has been closely following the US Supreme Court hearing on President Trump's use of the IEEPA, which is the International Emergency Economic Powers Act. The president used this particular act to impose the reciprocal tariffs without having to go through Congress. Now, all the lower courts previously ruled that the president exceeded his authority by invoking this act and imposing tariffs. But at this stage, it's at the highest court of the country. Separately, the ISM services PMI showed a robust reading at 52.4. It shows services sector expanded at the fastest pace in 8 months, but we again need to look at the underlying data, including the orders and the employment figures to figure out if things are actually good. Good morning, JK. What's your thought on yesterday's Supreme Court hearing?
Good morning, Swaraj. So the hearing has definitely started in a way that's not viewing the tariff actions legally satisfying. And most of the justices expressed serious skepticism about the legal foundation of tariff regime penned by Trump. And they questioned whether the president could unilaterally impose what are effectively taxes on the public through tariffs, noting that historically Congress holds that power. Obviously, the defense, solicitor also justified, but that it is not actually a tax. It is only, a fallout of the action that is considered against the countries which are, having their own controls on U.S. exports. So this argument will go on. I think is a lot as of now. It looks like the hearing will go on for much longer. Perhaps entire November is what people are expecting, and the ruling is very likely only in December. As of now, the betting markets are also showing less than 40% chances in favor of the tariffs being upheld. Actually, if the tariffs are not upheld, then it will raise questions of refunds. And US market is so weird that even these refund orders are being already traded at some discount. So that's how it is. Yeah, I think this we have to keep following this story, and how strongly the government can put up their defense of the actions that they have taken. But staying with tariff, Beijing also, rather China also cut its tariff rate on US imports from 125%. 125% down to 10%, but that is only for a 90-day truce period that they have agreed for. Uh, They also suspended or committed to suspend other non-tariff countermeasures that it had imposed on US goods. And China exempted certain US-made semiconductors from tariff despite the general retaliatory level also. So I think this is something that would have been agreed between Trump and Xi when they met last week. So market reaction to this was not much. But in the meantime, now it's real that we are into the longest shutdown period for the US government as of today. It has entered 36th day, and the last longest period was 35 days in 2019. Now I mean, people are watching what kind of impact it goes on as it extends. As of now, there is an expectation by many analysts that considering the bipartisan differences, this could extend till middle of December as well. So that probably is not going to be taken, very lightly by the markets also. Already, the U.S. Transportation Department has announced mandatory flight cuts at major airports starting Friday if the no shutdown deal is reached. So this is some sort of a development, and because there are thousands or hundreds of thousands of workers who have been furloughed without pay, and it is inconceivable to see that the consumption will not be affected, and in fact eventually the growth also will be affected. So that's something again we'll continue to follow. This is an evolving thing, just like the court case. But yes, there was some good news from the private data that was published yesterday. Services PMI rose for the 8th consecutive month and well into the expansion territory. Uh, In fact, the details also show new orders higher, employment also higher, the supply deliveries also higher, prices slightly inching up, and of course, the comments from the people who have been surveyed has been somewhat guarded, and they had a mixed outlook. Stated that the activity is generally flat over the month, and closely monitoring the effects of the new tariff announcements. But some people also said that business seems to be picking up, and the multifamily is a big driver. So there is kind of mixed reaction, or rather mixed opinion about the outcome by the people who have been surveyed. So another number that came better was the payroll growth at the private companies that turned slightly stronger than expected in October. This is the ADP private payroll report that came in at 42,000, following a decline of 29,000 in September, and more than the expected 22,000. Revision also was there for September by about 3,000. So at least that skepticism about job market worsening has been, somewhat not upheld by this number. Although we remain a bit skeptical because there is media report about some of the big tech companies planning large-scale cut down in their labor force, and that cannot be ignored. In this context, we should look forward to the Challenger um, layoff report that will be published today to see how many layoffs are happening. As of now, as even Powell has emphasized in his statements, the U.S. Employment situation is that the demand and supply, or both, are down now. Supply because immigration restrictions, and demand is because no recruitments are happening. So we are in a situation where there is no fresh jobs. At the same time, there are no layoffs also that is happening, kind of stagnant situation in the employment sector. That is what we are seeing. However, stock markets did take a beating on the on Monday, no, on Tuesday, when based on the Powell statements and some of the skepticism that was emerging about the AI investments and returns that cannot match the expectations. However, once again, better earnings reports has actually taken the market into positive territory yesterday, and there are enough number of investors who want to latch on to the minor dips that we get in this market. So the bullishness is not going away, but definitely we are in a zone from where many analysts and experts are expecting a sharp correction in recent statements and some of the forums where they were speaking. However, a market has its own timing even for the correction. So I think that sign is not there yet, although we are seeing some two-way movement in the market that is very apparent. On the yields, we have had a big jump in the yields, about 10-year and 30-year, after a strong ADP report and also the ISM report. Essentially, the market has been long of bonds, which is why the yields were holding down at once. Powell has made kind of hawkish statement about the December rate cut. The yields have started moving, and yesterday's data has actually given a further push to the yields as well. Dollar has settled into a higher range with euro correcting its overbought position. Pound has its own problem. We have another meeting from Bank of England today. There's only a 25% chance that they will cut today because UK has its own problem of higher inflation at the same time higher fiscal deficit as well. So rate cut chances in UK are likely to be much less. Although pound is still at the lower end of the range because of the overall strength of the dollar. Yen, of course, is now subjecting itself more to the risk sentiment. When the US markets and the Asian markets yesterday had got sold off severely when we saw the yen break even the 153 level, and now it is back near 154 levels. Now, it's not just a monetary policy, but also the risk sentiment in the global market that is guiding the yen's day-to-day movements. But overall, we expect the dollar's correction to be there for some more time before we see a sustained dollar selling as per its medium term trend. On the rupee, we had another action by RBI on Tuesday, selling dollars ahead of the market open, and to not a great effect, I would say, compared to the previous occasions, because the dollar went only as low as 80. 88 to 40. From there, of course, we had the importers coming back into the play, their hedging activity. So the dollar went back to around 88, 60 levels. However, has not made much progress from there, because now with RBI's intent being very clear at 88.80, having come near those levels on three occasions, market is a bit hesitant to go long of dollars, and also a lot of events that are coming ahead. US India trade deal, about which even the commerce minister has made some statements that the tougher part of the deals are being right now discussed. And we also have the political event of Bihar elections outcome. So market is a bit cautious. Yes, a definite line in the sand at 88.80. Either we hold there, uh, and with some good news, we go back below 88, or if it breaks for any negative factors emerging, if it is allowed by RBI, then we can see a sharp up move about 89 and 89.30 as well. So rupee, I think we continue to watch the central bank actions, and of course the upcoming events, which are going to be quite influential.
Thank you, JK. And as you mentioned, US shutdown entered its longest period at 36 days today. Considering the bipartisan differences, this could extend to mid-December as well. And this is already having a few impacts, like the US Transportation Department. It has announced some flight cuts because a lot of workers are being furloughed. And of course, all of this is an evolving situation. Another evolving situation is, of course, the tariff hearings. That is quite significant. And the arguments will go on, looks like, for much longer, since the subject itself is quite complex. On the data front, services PMI rose for the eighth consecutive month. Underlying data, new orders and employment was also healthy. US earnings report has also helped US equities to sustain this rally. But of course, many top investors are now calling this move extended, and signs of caution are all around. So when it comes to rupee, there was a strong action by RBI on Tuesday, selling dollars before the market opened. USDINR went as low as 88.40, but it quickly jumped on dollar demand towards 88.60. Now market seems a bit hesitant to go long dollar around these levels because of RBI's resolve to protect the 88.80 levels. That's it from us today. Thanks for listening. We'll catch up tomorrow with the fresh round of updates.